Night's session. Go ahead and get started here in about 2 to 3 minutes. We'll see how many people show up today. Happy Martin Luther King Jr. Day. If you're an American, happy Inauguration Day. A lot of stuff to go through tonight. Matter of fact, there's so much that I had to remove some of it. So we're actually going to cut it up into tomorrow's newsletter. Kind of looking at the similarities between market now and when Trump first came in, first 4-year term. And then also kind of talking through what we can expect with the Trump admin versus what we just saw with the Biden administration, etc. So once again, we'll go ahead and get started here in a second. Flip back and forth between the stream, make sure everything is working right. I'm on the West Coast for the next week and a half. It's currently 4 p.m. Pacific Standard Time, so we're running these sessions, at least I'm running these sessions a little earlier than what I normally do. And man, got to tell you, I don't know if I like it better on the West Coast or if I like it in the where I live in Brazil, where I'm 2 hours ahead currently from Eastern Standard Time. It's nice to be able to have a couple hours after running these sessions, but man, the mornings are brutal. So shout out to any of you West Coasters out there that are up early with me. 4 o'clock in the morning getting ready for pre-market. It's pretty crazy. Let's go ahead and start here in about a minute. We have about 90 charts to get through. I'm going to try to get through these in about 60 minutes. So we're going to rapid fire off. I'd say probably out of those 90 charts, 60 of them are trade ideas. There are a lot of trade ideas right now. The market looks fantastic. So let's go ahead and get into this really quick. For those of you that are not a part of TTI, if you'd like to join at the end, I will drop a link in the chat right now. You can check it out. It's good for your first 3 months. If you have any questions regarding that, feel free to reach out at the end. So without further ado, let's go ahead and get started here. I know that it's an important day, not only because it's MLK Day and Inauguration Day, but I think we have a college football championship game to get through. So let's go ahead and get through this. Here's our mid-monthly market review for January 20th, 2025. Roadmap for the first half of 2025. Disclaimer here, please don't be stupid. Don't risk more than you can lose. And please don't misconstrue anything we say today as buy or sell recommendations. Folks, we're just looking at charts. So first things first, I want to go ahead and start off with some seasonal stuff here from Mr. Jeff Hirsch from StockTradersAlmanac.com. Highly encourage you to go ahead and purchase that if you like this type of seasonal data. This is the best possible place you can go to look for this seasonal stuff. S&P 500 post-election year seasonal pattern from 1949 to 2023 says the first year of a presidential election cycle tends to be pretty goddamn good. Is it another 25%er? Probably not. At least probability says probably not. But we should still have a very good year. It's typically bullish. We are also in the third year of a bull market, which is typically not the year that the market rolls over. So seasonals are telling us that we should buckle up for a potential more volatile year than we saw last year in 2023, but still a positive year. For those of you in TTI, you know that we've been looking at the January trifecta, which is your Santa Claus rally first 5 days and the January barometer. Santa Claus rally finished red this year. It also finished red last year. So just because people say that that's a bad thing doesn't necessarily actually mean it's a bad thing. Go ahead and look at history. If you have that positive January barometer, which so far you'll see in the next slide, we do, things tend to be pretty okay. So you can go ahead and look at that, take a screenshot of it, and we'll talk about it again more tomorrow morning for those of you inside of TTI. As of right now, market performance year to date. Interestingly enough, you have your equal weighted indexes up more then you're not equally weighted. But still, every single major market index is green on the year. Yes, we pulled back, felt like the world was ending, and yet here we are, once again, year to date, up. The S&P 500 up 1.96, small caps up over 2%, the Q's up over 2%, Dow 2.27, equal weighted S&P 500 2.74, and NASDAQ equal weighted 3.51. So that's something that you should be keyed in on. Which areas of the market right now are leading year to date? NASDAQ, equally weighted. Weekly trend report. We send out this particular trend report every single Monday to give a general idea of what we're working with here on the three most important indexes, the S&P 500, the NASDAQ, and the Russell 2000. Gives us a opportunity to take a step back and figure out where we are in the grand scheme of things. As of right now, the short-term trends are repairing. These were bearish across the board. Last week was a pretty goddamn good week. Here we are, S&P 500 reclaiming the 10 EMA, the Qs reclaiming the 10 EMA, Russell 2000 reclaiming the 10 EMA. You can see that the trends are starting to repair here, and obviously you can infer that breadth is probably improving as well, which we'll look at in a second. So things are improving under the surface. Sector strength here. If you think about what we were looking at the beginning of last week, we didn't have a single sector above their 50-day moving average, and now we have a bunch of sectors above their 50-day moving average. We didn't have a lot of sectors above their 20-day moving average. Now we have a majority of sectors above the 20-day moving average. This is breadth improvement on an absolute basis. This is what we need to see in a market that wants to continue to push higher into all-time highs. Sectors are repairing, both defensive and offensive. This is very good to see, and we're seeing it. So kind of the theme today is when the market tells you to pull the trigger, you got to pull the trigger. The S&P 500 here, bullish engulfing on the weekly. That is not bearish, folks. Bullish engulfings are not bearish, folks. This does begin to put into question, was that the bottom? Did we bottom at the end of the Friday, 2 Fridays ago? Or last Monday, however you want to look at it? Was that the absolute bottom? I think there's an argument to be made there. I know we've been making it over the weekend. The NASDAQ, bouncing where it needed to bounce at 497 as well. Not quite a bullish engulfing, but a very strong week, up 2.87%. The Russell 2000, almost a bullish engulfing. Once again, though, bouncing where it needed to bounce, right near that 200-day moving average. Now, this is the weakest of the 3 indexes here, still underneath its pivot high from last bull cycle. We don't want to be necessarily super bullish small caps here until we're back up and over 235, but all 3 indexes sticking last week and proving where they needed to prove. Was at the bottom? We're going to continue to look at that and kind of ask that question throughout the rest of the webinar, but I think there is evidence to support that claim. Mid caps sticking where they needed to as well with the bullish engulfing. We've loved mid caps for the last 2 years. They've been some of our biggest wins. They continue to prove that the market wants to own these things, and they can flip of the 61850 area into all-time highs for mid caps has us opening a bunch more mid caps. We have some exposure on the books already. We'll see that in a second. Mid caps here leading the Russell 2000 higher. I think that's definitely an argument that makes sense here. The Dow Jones Industrial Average and Transportation Average. We did get a fake out at the end of 2024 with that Dow Jones Transportation Average. Do we get back up there and reclaim those previous cycle highs? I think we need to. The Dow Jones working on a good reversal as well after a multi-week drawdown. Both of these look path of least resistance to the upside, but we need them to prove it. Excuse me. Like we were just talking about, we need to see these areas flip back to the upside. It's nice. 1 week doesn't necessarily change a multi-week trend. Things are looking okay, but we need on an absolute basis some levels to be broken to the upside. We're not quite there yet, but we're close. I think there's a reason to be having this conversation. We should be gearing for it to happen. I think the most important chart outside of the dollar, which we'll talk about in a second, is the semiconductor industry group. I think everything that's going to kind of go through this bull market here as it has in the past is going to come through this semi space. We haven't done anything since July, but here we go. Finally, potentially resolving higher here on the weekly. Do we actually get the resolution and an all-time high stick up near 280? I think that if this bull market wants the next leg up aggressively, it's going to run through this semi chart. Once again, semiconductors against the S&P 500 on the weekly. They stuck it where they needed to. This is a multi-week push now against the S&P 500 and the highest close in 2.5 months. This is exactly what we want to see if you're bullish in the market. If you're bullish, you want to see semis outperforming the broader market. They haven't done anything since July. They're finally starting to stick it on a multi-week basis. Let's see follow through, though, on both an absolute and a relative basis here. It's a very, very good start, though. Total crypto market cap, if you've been sleeping under a rock, Bitcoin hit all-time highs. We'll look at that later. Hit all-time highs this weekend, along with some of the craziest meme coin drops I've ever seen, Trump, Melania, etc. But hey, listen, as long as we're above the 3 trillion market cap in crypto, you cannot be risk off, at least in the crypto space. I'm going to go a little bit further out and say you can't be risk off in the TradFi space as well. Crypto is a product of liquidity. Liquidity is rushing into the market. We said line in the sand, 3 trillion above that. You can't be risk off the crypto market. And if you're not risk off the crypto market, what the hell are you doing thinking that the TradFi market's about to crash? I don't see it happening. Here we are currently at 3.5 trillion. Just to point something out, if you're bullish Bitcoin, there's absolutely no reason why you cannot trade TradFi products as well. Bitcoin, Robinhood, Coinbase, MicroStrategy, all three very highly correlated to Bitcoin. Robinhood, Coinbase, MicroStrategy. You can see the performance is going back about a year. Hood is our vehicle of choice. because we love the options that come along with Hood. But just to throw this out here, if you're long Bitcoin or you're bullish Bitcoin, there's absolutely no reason why you can't grab some of this stuff in the TradFi space as well. Because guess what? Some of this stuff is going to move more than Bitcoin, and it's moving with Bitcoin. So if you're bullish the underlying asset, grab some of those highly correlated assets that tend to move a little bit more. I think everything's going to go through the dollar, though, including semis. Semis are the most important equity-based chart in the market. Excuse me. Something in my throat. The dollar index, though, has to be, the most important chart in the entire market. We know that the dollar is inversely correlated to stocks over the last 3 years, meaning whenever the dollar rips, stocks tend to get crushed, and whenever the dollar drops, stocks tend to do well. Well, did the dollar start to top out last week? We saw a crazy move today in the dollar, right? Trump administration came out and said they were not going to tariff everybody, at least on day one. The dollar responded negatively. We saw a big pop in a bunch of different foreign currencies. That's exactly what the equity market likes to see. We're seeing that push through the Bitcoin as well, crypto strength as well. All the stuff is interconnected. I think that if this market really wants to rip higher, it has to go through the dollar, and that means dollar back in the 2-year range that we just broke out of a couple of weeks ago. Do we get there? As of right now, it's a breakout with a potential retest of that 2-year high breakout. Here's your dollar and S&P 500 on the weekly chart, just to show you that every time the dollar starts to top out, the market tends to bottom and start rallying. Do we get a dollar topping out now? Does the market take that as an opportunity to rally? That has been the correlation over the last couple of years. If you're a bull and you expect this market to rip higher, you should be expecting some dollar weakness to come in. Now, the dollar doesn't need to absolutely die, but it needs to stop ripping higher. Was last week kind of that beginning? Where if we fall back in the range, I think that that's definitely a question that we should be asking throughout this entire week. And if that's the case, the dollar falls back in the range, you cannot be bearish the equity market. It doesn't make any sense. We also saw for the first time in a while, TLT stick it. Bonds finally getting bid down here. We were talking about that hidden bullish divergence for the last week and a half. Did we actually get it? We don't necessarily need to be buying bonds along with equities, but the bond market has been correlated positively with the equity market. As bonds get crushed, equity markets had a really hard time following through on any sort of momentum to the upside. If bonds do stick it here and the dollar starts to drop, that's a perfect recipe for a runaway equity market to the upside. We saw the beginnings of it last week. We need to follow through this week. This is what I am focused on this week: bonds, dollar, and then the major indexes. Do they all start moving in the right direction for bulls, or do they break away and start falling again in favor of bears? U.S. oil here, finding support multiple times. We took long, a bunch of energy-related plays. A couple of them flipped free for us last week. RRC, I believe AR. I believe we opened up Coterra as well. U.S. oil here, multi-week high last week. Do we get the follow-through or not? I'm hesitant to open up a bunch of energy-related positions, although a bunch of them are up on the scans right now. We're going to have to sit here and continue to watch U.S. oil, though there is an opportunity for it to hit up towards $85, top of the range. If that happens, expect more energy plays to get opened up. But right now, 3 is totally okay with me. Offensive sectors on the weekly here, just look from left to right. We have tech, consumer discretionary, communications bottom left, financials bottom right. All 3 of those charts look great. Look at the candle on financials. Obviously, banks started reporting last week. Bullish engulfing in financials is not bearish. That key pivot there at the 1.618 fib extension down here at the 49 area, absolutely key. Next stop up, $61. Consumer discretionary, bullish engulfing. Tesla had a really good week. Amazon tried to follow through. As long as we're trading above 212, it's hard to be bearish. Consumer discretionary, next target up, 265. Tech has not done anything since July. A lot of that has to come through semiconductors. So if you expect semiconductors to start to catch a bid here, which they did last week, you'd expect tech to continue to rip out. Price target 275 there. And then comms, totally okay, right? We're in the ongoings of an uptrend here. Nothing to worry about. As long as we're trading above 86.5, price target is 11215 here. All 4 of the offensive sectors look absolutely incredible following last week's close. This has really been where we've been focused over the last couple of weeks. Defensive sectors have been absolutely trashed, right? Listen, defensive sectors do not have to lead the market to the upside in a bull market, but they absolutely cannot be breaking down below previous cycle highs. That is not good for any market whatsoever. And Last week, we started to see some potential turnarounds, right? Utilities back up and over the previous cycle highs here. We saw materials catch a really big bid here. Look at that candlestick there on materials, one of the bigger days over the last couple of years, or weeks over the last couple of years in materials. Healthcare, multi-week pivot here, multiple weeks in a row where we closed to the upside, and consumer staples trying to catch a bid as well. Was there rotation under the surface out of some of these defensive names and into some offensive names? I think so. I think what we just traded through, if that was the bottom, early last week. We've been talking about this inside of TTI. It looks more like rotation than shoring up capital for the big bear market that's supposedly coming in 2025. We were seeing rotation out of defensive stocks and into offensive stocks. Now, defensive stocks should get bid here, right? If we expect this market to continue to pop up, defensive positions and sectors need to be performing decently well. They just, they don't need to lead the market. But we should see them reclaim these previous cycle highs. And if they do, they will start showing up on relative strength scans as well. So that's something to keep an eye on. U.S. sector four-year performance. We're going to talk more about this week inside of TTI. But something I want to point out here is the fact that if you're buying stocks based off of policies, it's been a very, very tough way to make a living over the last 4 years. And ironically, the last 8 years. Because we have the same data going back to the Trump administration as well. We're going to get into that tomorrow. Last 4 years, the best performing sector, energy. The worst performing sector, consumer staples. Who had energy as the best performing sector over the Biden administration? Most people probably not. Probably not. And yet it was. Tech, financials, S&P 500, everything else underneath it. Going to the beginning of the year, things have changed a little bit if you guys haven't noticed. The leaders in 2024, particularly the back half of 2024, have not been the leaders in 2025 through the first couple of weeks. Energy is leading, materials are leading, industrials are leading, utilities are leading. These are different areas of the market that were not particularly leading Q4 of 2024. Now, industrials have been a market leader since the bear market bottomed back in 2022. But listen, energy hasn't really done a whole lot since 2022, and now all of a sudden it's popping up everywhere. Materials caught a big bid. Industrials, once again, although they are drawing down, caught a big bid. Utilities. Is this the beginning of a potential rotation into lower volatility? It's a question that we have to continue to ask ourselves. We are seeing lots of commodities-based equities pop up on our scans. We're seeing stuff that we wouldn't normally have wanted to touch 6 months ago pop up on our scans. We're actually taking feeler positions out there in some of these names. Nobody wants to trade this stuff, but if the market is going to buy it, we have to own it, right? So that's what we're going to be focused on over the next couple of weeks if those relationships continue. U.S. industry four-year performance, once again, oil leading. Oil performed better than semis over the last 4 years. So once again, the Biden administration was notorious for not loving dirty American energy, right? They loved clean energy. They loved solar energy and your green energy down here, the worst performing industry groups over the last 4 years. So once again, for any of you guys that think it's easy, just go and buy the policies. It's going to be the same thing with this 4 years. If you actually go back to the 2017 through 2021 window and you look at the best performing industry groups, so Trump's first administration, it was these two, solar and clean energy, right? And he was all about drill, baby, drill. You want to know what the worst performing industry groups were over his first tenure? Oil. So once again, think outside the box here. It's not as easy as just a presidential cabinet, new administration coming in saying they're going to do something. If you go and buy the stocks that make the most sense, last couple of years, 8 years, has not been a blessing to you whatsoever. So do the homework. Look at what areas of the market are actually going up instead of what makes sense that should go up, and go and buy those. Right now, year to date, oil is performing the best. Gold miners, then semis, metals and mining. This is a completely different group than what we saw in Q4 of 2024. Once again, the reason why I keep pointing this out is because if you're just going to go and buy the stuff that was working in 2024, there's a decent chance that you're going to underperform this year. You have to be looking at what's going on right now. And a lot of things are different. Areas of the market that were underdeserved in 2024 all of a sudden being bought in 2025. So do the homework here. Factor analysis performance year to date. This is just to show you that we are starting to see some rebirth in small caps. I think jury's still out until we're above 235 in the Russell 2000, but they're not as bad as what people want to say, right? We are trading through a seasonally strong period for small caps, and they are not showing that whatsoever. So I'd be very keen on watching small caps here through the middle of February. That's when that seasonal strength really starts to diminish. And if there is a catch-up trade to be had right now, it is small caps because they have been crushed over the last couple of weeks. Short, intermediate, long-term trends in the S&P 500 are improving. S&P stocks above their 20-day, 50-day, and 200-day all at 1 month highs. Once again, bears do not want to see this. This is one of their favorite charts when Market Breadth was breaking down in December. And they were saying, if your thesis for this market, this current bull cycle to be over, was that market breadth was deteriorating, what does it mean when market breadth is all of a sudden not deteriorating anymore? As a matter of fact, it's screaming back to the upside. If you were bearish, you better be very, very, very quick to closing those shorts and flipping long very shortly, because if we continue to see confirmation of these new highs in the percentage of stocks above the short, intermediate, and long-term moving averages, you're going to get left behind. And even worse, you could be shorting new all-time highs very shortly. So we are seeing market breadth continue to expand here, equal weighted, sticking it. Look at that bullish engulfing there. Once again, how many bullish engulfings can we possibly have in one webinar? Probably this will be a record here. I think there's probably 30 or 40 of them right now, but equal weighted S&P 500 sticking it as well. Market breadth continuing to improve. Equally weighted NASDAQ sticking it with a bullish engulfing. Once again, market breadth is improving as long as we're holding above that 121 area, the previous cycle high. Is how the hell can you be bearish? It's crazy to me. Market trends are very clearly going higher. Number of stocks going up versus number of stocks going down stopped going down last week. I think this is the beginning of a continued move to the upside. We're going to look at that more tomorrow during our morning newsletter. But for the first week, in 5 or 6 weeks, we had more new highs than lows in the S&P 500, and we also had more new highs than lows in the NASDAQ 100. So yes, once again, we saw a lot of improvement last week. We need to start seeing some follow through on an absolute basis. If you're inside of TTI, you know what levels we're looking at to the upside in the indexes, but we are seeing market breadth improve. Listen, it doesn't matter how else you want to look at it. There are less stocks going down than there were a couple of weeks ago when everybody thought the world was ending. Doesn't look like the world's going to end anymore. The put to call ratio, people got crushed last week. There's nothing really to be had from here except that people got out of their puts at a record pace last week. They got absolutely crushed. It does look like people are gearing up for the next leg up. There is not as many people willing to bet that this market is going to continue to break down after last week's performance. We'll see if that ends up being a headwind, though. We do like to see puts increase into those big rallies. The average stock performance through your value G chart here showing a huge improvement last week as long as we're holding above 600, kind of that bear market high there. There's really nothing to worry about. I would expect that the market's going to continue to rally here, though, that this value G chart is also going to rally. I would not be surprised to see a 667 on here over the next couple of weeks or months as the market once again potentially broadens, as we've been seeing over the last 5 trading sessions. Higher beta versus lower volatility. Once again, we are seeing higher beta catch a bid. We're at 6-month highs. Higher beta stocks. This is not bearish, folks. As a matter of fact, I saw a chart earlier on Twitter, which I wish I would have brought in here, but if you superimpose this with a BTC against the S&P 500 or some chart like that, they look relatively the same. You know, the market is continuing to choose offensive-minded stocks over lower volatility and defensive-minded stocks. Even when the market was pulling back, the market was not selling off high-beta stocks. This was a core premise in why we were not willing to go and short the market over the last 3 or 4 weeks. We did not throw the towel in. We did not say this bull market was over. Jury's still out on whether or not that was the right call. We'll know probably by the end of the week if we're at all-time highs or not, or at least breaking back upwards. But this is a huge, huge, huge intra-market relationship that you need to have burned inside of your head. If the market is not selling off the higher beta stocks in a pullback, what is that telling you? Maybe it's telling you that it is just a pullback in a normal uptrend instead of a full-on trend reversal to the downside. So 6 months high there. Consumer discretionary against consumer staples. We're at all-time highs once again. This is a very, very bullish chart there. They did not want to own consumer staples over consumer discretionary, and then equal weighted consumer discretionary against consumer staples at all-time highs going back to 2007. This is not bearish, guys. These ratios should be breaking down if that was a reversal and a potential new bear market incoming instead of just a regular pullback. Risky corporate debt versus riskless treasuries, if you will, in the weekly. This is our 5-year highs. There's absolutely nothing to worry about with credit. We should see this ratio breaking down if the market was gearing up for a potential bear market, and we didn't. As a matter of fact, this ratio went sideways when the broader market was going down, showing us relative strength. These are the types of things that people don't necessarily want to look at because it goes against some of their narrative. If they start to see the market fall back, but they don't see this type of data support their claims, they're going to ignore it. This stuff is arguably more important because we're seeing positioning across the market. We're seeing positioning from the largest and most sophisticated market participants. The bond market is screaming at us, telling us that there's nothing to worry about yet in terms of credit. And so why are we gearing up for a new bear market? It doesn't make any sense to me. We'll see if that was the right call or not. Stocks versus shiny rocks. This is another thing. People love to say that if gold is catching a bid here, there's something wrong with the market. It absolutely is not true. Over the last 2 or 3 years, stocks and gold have performed relatively the same. Literally, this is GLD and SPY going sideways. Gold is a great trade right now. Equities are a great trade right now. We have trades on both. We're going to go through the gold trade later. Don't listen to people that say gold going up is bearish for the stock market. It absolutely is not. We have the data. We're actually looking at it. Mag 7 stocks are looking to reclaim previous highs. There are a lot of good charts out there. There are some that are not so great. We're going to look at the ones that are good, at least in tonight's session here. I would not be surprised to see this break back out into all-time highs later this week, as you've seen some of the Mag 7 stocks really set up and start to prop up end of last week. Professional money managers are still timid. This is the least bullish they've been going back to August of last year. They really got cooked over the last couple of weeks. They have not necessarily reclaimed. There's a lot of room to the upside here in professional money managers and AAIM number. This is a tailwind to stocks breaking out. These guys are afraid of their own shadow. They sold off at record numbers. They're still not properly positioned. That's a lot of money that's going to be coming into the market if we do start breaking out to all-time highs. And then the worst investors are getting even more bearish. Imagine that. The worst investors in the world, your AAII bull bear spread, 40% of them believe that this market is going to be going down over the next 6 months. I do not want to be on the same side as these guys. These guys are notoriously terrible. They trade with their emotions. These are the guys that are in your replies when you say, hey, this trend's going up, and they go, there's no way that can go up because your PE ratios are too high or whatever the hell it is. These guys are terrible, and they are bearish right now, so I'm glad that we're seeing data to support the other side. Okay, so I think I've done a pretty good job at showing you market breadth is continuing to improve. Trends are continuing to improve. The world is not ending. We saw a lot of really good data last week. And so, along with the whole vibe shift that I'm sure you've seen, we should be gearing up for potential all-time highs. We have some absolute levels we're looking at to break out to the upside here. I think what we should spend a majority of the webinar on is scans and trade ideas. So that's exactly what I did here for the next 30, 40 minutes. We're going to be looking through chart-heavy trades. All right, so first things first, heavy hitters report. We're looking at the big boys that are U.S. domiciled here. We're looking at the biggest stocks in the market that are U.S.-based. We want to own them. Generally speaking, you own a couple of these in an uptrend, you're going to make a bunch of money. So let's go ahead and go and find the ones that look the best. Goldman Sachs, fresh off an earnings report, all-time high breakout. I'd like to own this with a pullback towards 600, 605, price target 650, and then 800. This is a trade that we've had on the books 2 times over the last couple of years. We have no current position in it, I don't believe. So any weakness that we can find in Goldman Sachs, we want to buy it. Once again, own it up to 650 and then 800. Good trade. Lots of liquidity on the options chain. This will go out tomorrow morning as an options trade as well for those of you inside of TTI. Upward sloping 200-day moving average, beginning a new bullish momentum regime. I like everything that I see in Goldman Sachs. Banks have just been absolutely killing it. How about this Morgan Stanley trade that we've had on since $110? This thing's like 300 or 400% for us. I'm looking at actually adding more into this. On a pullback to 135. We get a pullback to 135. I'm looking to add more into this. Our current positions are the June 2025s up 300-400% right now. I'm going to go further out. Deep into 2025, I'm going to target the 175 to 180 area. Once again, just like Goldman Sachs, we're starting a bullish momentum regime. We're trading north of an upward sloping 200-day moving average. This looks absolutely fantastic. There's no reason why we shouldn't own more Morgan Stanley, but we want to own it on a pullback. Once again, banks look fantastic here. Citigroup, this is a trade that we just opened up about a week and a half ago. We caught the pop-up in based off of earnings, and we like to pivot up to 78 here. There is an opportunity to potentially add into this trade. It's free for most of you that already opened this, so a pullback towards that 78 area, right? The 2.618 opens up for a potential opportunity to add more up towards $90 to $95. This will go out tomorrow morning as a new trade idea. Once again, do not add into this unless the current trade is already free. But most of you guys should have a free trade on Citigroup already. We have a bullish momentum regime. Looks absolutely fantastic. We started it in Q3, Q4 of 2024. Trading north of an upward sloping 2-day moving average. Absolutely love this trade. This is a third bank stock. Banks are really popping off here. Citigroup looks fantastic for an opportunity to continue to add. GE Vernova is one of our best trades that we have on our books right now. We were able to open it up at the bottom of the range here down towards 325. Look at this momentum. The entire market pulled back. This went sideways. We said that's relative strength. We got to own this. And look what RSI was telling us the entire time. No matter how much the indexes were getting crushed, GEV did not want to trade lower. It looks absolutely fantastic. Now, there's not an opportunity to add here, unfortunately, but 420 is kind of that first price target that I'm looking at here, and then I'm looking for a potential 500 move. For those of us that have the April 400 calls, we're in the money here. We might be able to shave off some of that at the 420 and then extend that play out up towards 500 or potentially 550. Spitballing here, but this is a chart that you got to have. This is part of that AI bubble trade that we were talking about. The AI utilities trades, right? GEV, VST, CEG, that type of idea. GE Vernova should be a name in your portfolio. Look to add above 420. If it gets there, we'll post it. JP Morgan, above 250. We like this up towards 300 and then potentially beyond. We want to open up more of this on a pullback. This is the exact same trade as Goldman Sachs, exact same trade as Morgan Stanley. We like this setup. They're all relatively the same. You don't have to own all three. You can own all three if you want. I think focusing on one of these in particular, since they're all relatively the same setup and they're obviously within the same sector and industry groups, own one of these and just really watch it, right? RSI beginning a bullish momentum regime, trading north of a 200-day moving average. Any pullback towards 250, there's an opportunity to add here. JP Morgan targeting 300 and above. Absolutely love this. I still have a position when we very first opened this up at the all-time high pivot way back, but it's a shares position, so I'm looking to open some more options on here. Here's a trade that was going to go out tomorrow morning. We're just talking about some of those industry groups that lagged in Q4 of 2024, now showing leadership characteristics. Industrials, right? 3M showing relative strength while the market pulled back. This chart was going sideways, the beginnings of a bullish momentum regime, upward sloping 200-day moving average. We like this above 134, 135 with a price target up 170, 175. Options are available. It will go out tomorrow morning officially. Some of you guys already opened it on Friday, so congrats if you did that. Love this trade. Don't think there's any reason why we shouldn't take this as a relatively tight stop. It's a high R to R, I think 5-1 from an equity standpoint, and options chain looks absolutely fantastic. Low IV environments into big blue sky territories, that's what we want. Cisco continues to set up. I know. It's Cisco. It's a slower mover. Above $60. I like this towards $77. This is already on my books. I've got plenty of time on it. Upward sloping 200-day moving average. Bullish momentum regime on the RSI. I love everything about this. It's going to take a little bit more. It's not going to move as fast as some of the lower or higher beta, lower market cap stuff, but Cisco is a staple within the heavy hitters report. We got to own this. Got to have a piece of it. Above 60, $77. Trade idea is already up on the site if you want to own this. American Express, we were looking at this a couple of days ago. We like this above 305. If there's any pullback towards that 305 area, there's a potential to add in if you missed the initial breakout. We like it up to 370 here, upward sloping 200-day moving average, bullish momentum. This thing has been an absolute beast over the last 6 months. There's no reason why we can't own this at this key pivot point at the 305 area. So any sort of pullback, feel free to go ahead and add in on that. Options will be out tomorrow morning as well. Visa, a lot like American Express here. I like this above 320. There is no pullback here on Visa. I like this just above 320 with a price target up between 365 and 375. Bullish momentum just like American Express over the last 6 months. Upward sloping 200-day moving average. This is not something where you're going to want to go out and grab MasterCard, Visa, and American Express. Grab one of the three, just like we were talking about with the banks. You don't need to own all three of them. Just own one and watch it. Visa looks great. American Express looks great. MasterCard is the weaker of the three. But Visa and American Express look good. If you get the pullback on American Express, buy it. If you can buy the breakout at 320 and Visa targeting the 365 to 375 area, you can also grab that as well. Marvell, now this is a position that we already have on our books. It's free. It's up rather large for us. If we tap that 131 area this week, which we absolutely could, there's an opportunity to add in above 131, and that's what I'm looking at here. I'm in the camp that semis are not rolling over. I'm in the camp this bull market is going to continue to rally. Maybe we don't get another 25% year, but as the new president, President Trump, I should say, said America's golden age is starting. And guess what? I think it's going to run through semiconductors. So above 131, I want to own this with a new price target up near a 190 to 200, but we want to own it on a cross above 131. Let's not try to jump the gun here just in case. We have an incredible position here. We're going to be taking some profit at 131, and then we can use that profit to really juice this potential breakout, buy more time, go further out, etc. So Marvell above 131, price target 190. Congrats to those of you that own this. This has been a big win for us. Google, This is my favorite Mag 7 setup. I've been talking about Google for a long time. We already have exposure. We have a lot of exposure in Google already. If you don't have Google, above $200, I like this to 250. It's really that simple. Market's been getting crushed over the last 4 to 6 weeks. Google's gone sideways. That's called relative strength, folks. 200-day moving average sloped up. Price is up and over it. We have a bullish momentum regime on the RSI. I think the market's screaming at you that you need to own Google here. I don't care about the PE ratio. I don't care about ChatGPT. I don't care if Claude isn't great. I don't care about any of it. Price is telling you the market doesn't want to sell this. You got to own it. It's a Mag 7, above 200, price target 250. And then Deere & Company. Yes, we already have a position on this. I actually got stopped out. Half of it got stopped out, so I'm only holding a half our position. We're right back up and over the risk on level. I love when this stuff happens. Isn't it great? Like this above 448. It's the exact same trade idea above 448 with a 550 price target. If industrials start to catch a bid, which they absolutely did, look at John Deere's response over the last week. This is a leading name in the industrial space at a key pivot point. This is an all-time high breakout above 448. I think you got to own it again if you got stopped out. I'm not going to add in until we get a pullback to 448. I still have half of a position on the books. I feel like a Dumbo for stopping out half, but got to follow the rules, right? Price target 550 as long as we're above 448. Buy any weakness back towards 448. Amazon, the other Mag 7 stock I really like here, consolidating in somewhat of a bull pennant, a bull flag after a massive run up in Amazon. This is one of the laggers of the group of the Mag 7s, right? Above 190, we liked it up towards 257. I think there's an opportunity to own more Amazon above 230, which we could be at tomorrow. If the market gaps up tomorrow, a very normal move for Amazon would put us above 230. I think we want to open up more above 230 with a new price target up near 255 to 260, potentially beyond. We already have a position in Amazon. It's doing all right. Hasn't done a lot over the last couple of weeks. But once again, just like we were talking about the other things, this is relative strength. Market got crushed. Amazon came down in a very orderly manner. We've held the 50 RSI. 200-day moving average looks great. For whatever reason, once again, market's telling you it doesn't want to sell off Amazon, so go and own it. Our trigger is 230. Once again, price target to the upside, 255 to 265. How about this? Bank of New York Mellon. This is a trade that we put on at the 64.5 pivot. Unfortunately, we didn't have enough time to continue to own it through the entire rally here, but this was a really good trade for us as a multiple 100% winner. And here we are once again breaking back out post earnings. I think a pullback, any sort of weakness to $81 or $80 gives us an opportunity to open up a new position up towards 105 to 110. This will go out as a trade idea tomorrow. It's an excellent options trade as well. It's a low IV environment. So for those of you that are looking to add some options exposure to these big blue sky types of setups, Bank of New York Mellon, is a great name to do that. Trading north of an upward sloping 200 moving average, and just like Goldman Sachs, JP Morgan, and Morgan Stanley, it's the beginning of a bullish momentum regime. I want Bank of New York Mellon again as an options trade. It'll go out tomorrow morning. Let's shift gears. Let's talk about higher beta stuff. So heavy hitters reports, all the big stuff. Mag 7 stocks. We're talking market caps of 50 to 100 billion plus, domiciled in U.S. Let's talk about the higher beta stuff, the stuff that really moves here. If you remember back in Q4 of 2024, this is really the area of the market where people were making a lot of money really fast. There's definitely an opportunity that market comes back again. If that was the bottom last week, at the beginning of last week there on Monday, I would be looking for the growth leaders report to really come in clutch over the next couple of weeks. A lot of these names are going to be repeat names that we've already opened, but that's the point. We're still in some of these names. Are going to want to add into the strongest leaders that we can find. Robinhood, trade that we have on the books. We have multiple tranches in here. I'm not looking to add in here yet, but we're going to talk about taking some profits. $47.48 just got hit on Friday. If you're trading Bitcoin or you're long the crypto market, you got to be long Hood, right? This is a highly correlated area of the market that should continue to do well if crypto is doing well in general. Hood has been one of the bigger leaders inside of the crypto space. From a TradFi standpoint, we love this thing up towards 50 or $60. We have some exposure going out into June for $60. There's no reason to expect that it can't get there within the next 6 months. Any sort of consolidation in Hood should be bought. Any sort of weakness in Hood should be bought. If you're bullish the crypto market or Bitcoin in general, you should be bullish Robinhood in general as well. Bullish momentum regime has stayed intact for the last 6 months. 200 moving average slope to the upside. This has been the big winner over Coinbase as well. I get that question almost every single day. Why Robinhood over Coinbase? Well, it's very simple, because Robinhood is going up. Coinbase is not. It's really that simple. Own the leaders. Globus Medical, GMAT here. I like it above 84.5 with a price target of 110. Upward sloping 200-day moving average. Bullish momentum regime. Things look good here. You're up into big blue skies territory. Any sort of weakness here gets bought back up. Price target of a 110. This is a medical devices company. SoFi, we have a position in here. We have a couple of positions in here already. I think a rebreak of 16.5 or 17. We can have new price targets up here at 19 to 20 bucks, and then $25. Open up some new exposure there. For those of you that were able to buy down here towards that 13.5 area, congrats. That was a hell of a snag for you. For those of us that were watching other areas or more tentative because the market was pulling back, 16.5 or 17 new entry trigger for a $19 to $20 price target, and then $25 price target. RSI looks very bullish here. We held the 50 RSI through the entirety of the drawdown, which is really important for us. 200-day moving average is sloped up, and we didn't even come down and come close to testing those previous, the stage one highs there at $10. So SoFi, I love it. I want to own more of it above 17 bucks. Pivot, 20 bucks price target, $25 price target. It's another good options trade, by the way. TSM, we opened this up a couple of weeks ago above 205. I still continue to like TSM here. I think it's a market leader. It's one of the bigger stocks, almost $1 trillion stock now at this point. I like it up to 265, above 205, currently trading 211. I like the consolidation fractal in Q4. Semiconductors weren't doing a whole lot. TSM was going sideways, meaning relative strength across not only the broader market, but also the semiconductor space as well. That tends to lead to absolutely big gains when the semiconductor space really starts to pop off again, which it does look like based off of last week's close is coming in very shortly. So I like this above 205, price target 265. Upward sloping 200-day moving average, 50 RSI is intact there. I like it. I own it. I want to own more. We're going to look at future leaders here. We're looking at the previous last 5 years worth of IPOs, and we're looking at the leaders here. We throw some volume requirements on it, make it a little more tradable, but these are the names that the market would be selling off traditionally if the market was going to break back down into new bear market lows. Why would you own some of the riskier areas of the market over some of the Mag 7 stocks? Doesn't make sense. They're not. Future Leaders Report slammed right now. Constellation Energy Group. New highs above 312. I think you got to own it up to 375. This is going to be a more difficult options trade, but from an equity standpoint, there's plenty of opportunity here. We've owned this a couple of times over the last 2 or 3 years. Above 312, own it back up to 375, potentially 431 as well. Roblox, here's something that we were just looking to add in. Any weakness back towards 62 gets bought back up with a price target of 85. This will go out tomorrow. Bullish momentum regime since the end of October. Upward sloping 200-day moving average. Just broke out of a bull pennant here that it consolidated in multiple weeks in a row. Looks good. We really like when they consolidate around our price targets. First price target was hit at 62. Went sideways while the market was going down. Big relative strength winner here. Like this up towards 85 bucks. Buy any pullbacks towards 62. This will go out tomorrow as an options trade. Another one of those really good options trades. Dutch Bros, we already have a position in. This is a free trade for us, and it's up relatively large. First price target, 66 bucks, just like Roblox. This went sideways when the rest of the market was coming down. Feels good to own this. We're looking at taking profit at 66 and potentially owning more up towards 90 to 75. Bullish momentum regime intact. Upward sloping 2-day moving average. Dutch Bros looks fantastic. Way, here's a trade that we opened up way back when, no pun intended. Bullish pennant also forming here. We like when these sideways fractals get built out when the market was pulling back. Bullish momentum regime looks good. I want to own more above 38.5 with a price target of 41 and 44. I already own a portion of this. I've de-risked and then risked back on and de-risked and risked back on. This is an equities related trade for me. It's done very well. I'm going to continue to own this thing, assuming that it resolves higher here above 38.5, price targets of 41 and 44. Global E Online, trade that we opened up way back in November. This is an Israeli online retailer. Once again, going sideways when the broader market was coming down. I don't want to add in here. Look for the first price target at 63.75 to get hit, and then we can talk about owning it up towards 93. It's the same setup as Dutch Bros, but we need it to prove itself. Bullish momentum going back 6 months, 200-day moving average sloped up. Looks like it should do very well here. So far, it's been a pretty okay trade. Just need to get it to resolve higher on the absolute basis. I think the last one here is ON Holding. We're about to break out into all-time highs here in ON. I like this right now above 57.5. I don't think we need to wait for the 60 area. Own it above 57.5 with a price target of 70 to 70.50. There's a good options trade. 200-day moving average is sloped to the upside. We've been in a bullish momentum regime going all the way back to the middle of last year. So we're going on like 7 or 8 months here. ON has been a really good trade. For those of you that are able to buy a little bit of time and wait, I continue to like it. I want to own it above 57.5. up towards 70.50, and then once again up towards 83.5. For those of you in TTI, you can tell that the mood of the market has changed. Look how many setups are here. Over the last 4 to 6 weeks, we've been kind of sitting on our hands and going through scans and looking at all the setups and thinking, all right, like when we start seeing a bunch of setups come back in the market, screw what everybody thinks. We got to start owning them again. And here they are. We've just went through 30 or 40 really quickly, and we have a lot more to go through. Rising Stars report. These are the small and mid-cap names that potentially could eventually get up to large cap status. So we're looking at all kind of the higher beta crap stocks. Let's look through some of them. Hess Midstream here. A lot of energy-related stocks on scans right now. Hess Midstream all-time high above $39.5. I want to own it up to $60. Going back to 2017 here when it IPO'd. So above 26.5 was the original call out there. 200-day moving average sloped up. This is a slower moving midstream-related name, but above 39.50. I like this up towards 60. There is an opportunity to own this on the options chain, but you got to buy time with this type of stuff. Geo Group. Better equities trade than an options trade given the volatility, but above 34.5. I like it up towards 52.75. Bullish momentum regime has been there for a couple of months now. 200-day moving average slope to the upside. I think this is a play on border security, if I'm not mistaken. This was an original trade that we took back at the $9 or $10 pivot, currently trading at 35.35. So any weakness back towards 34.50, buy this up for a price target of 52.75. Lifetime Group, a trade that we have on the books. We opened it above 22.25, got the all-time high stick on Friday. Nothing to do here until we're up near that first price target at 30 or 30.50. We do start building a base out here above 30.50. We could potentially add more for a price target of 44. As of right now, let's just continue to let this thing go. This is a better equities-related trade than an options-related trade right now. There's not enough volume on the options chain, but a technical setup that we like to trade here. This is the most overbought it's been in the last 6 or 7 months. We'll see if it continues to scream to the upside here. 30.50 first price target. If the dollar is going to drop, international stocks should do better. It's a relationship that we should see. If the dollar drops, we should see international stuff do a little bit better here. And so I wanted to go ahead and throw the international heavy hitters report. There's a lot of crap out there in the international space, but I want to look at some of the stuff that has options volume and is also setting up. The first one here is Spotify. This is a trade that we took at the 350 pivot. It's been a slower mover the last couple of months here, but I think it's setting up for a new opportunity to own above $500. $500. Price targets at 600 and then potentially all the way up at 800 depending on how much you actually want to go out and buy this from an expiration standpoint. I think this is a name you got to own though. Spotify is an international stock. I think it's out of Sweden, right? If I'm not mistaken here. Should do well if the dollar's coming down, but also it's a tech leader, right? It's done remarkably well over the last couple of years in this bull market, and it's setting up for another run. Just like Google and other major stocks, it was going sideways when the rest of the market was coming down. So Google above $500, I want to own more. Potential price target up near $800, but that's going to be, you're going to have to really go out and buy some time on the chain if you're an options trader. From an equities trader, though, I think it's a relatively high risk to reward setup, right? You're looking at a 500 area breakout, add it up, add position up towards 805, and your stop's just somewhere beneath fractal low. It's a very high risk to reward setup on both accounts, options and equities. Just need a little bit of time with the options trade. Upward sloping 200-day moving average and a bullish momentum regime. I love Spotify. I will be adding this. It'll go out tomorrow morning. Sea Limited, another stock that we've had on the books. It's just slower mover. Above 120.75, we're looking to add more exposure up towards 170 to 175. This is a Asian-related stock as well. Upward sloping 200-day moving average bullish momentum regime has been intact over the last 6 to 7 months. We'll be looking to add some exposure above the 120.75, 121 pivot. Once again, 173, 175. Let's talk through some crypto stuff, and then I'm going to let you guys go really quick. Bitcoin looks fantastic. If you were living under a rock, Bitcoin all-time highs over the weekend. If you're bullish the crypto market, you got to be bullish the TradFi market. These things are correlated. And then also, if you're bullish the TradFi market, you got to be bullish the crypto market, right? You're coming into an administration that is arguably the first pro-crypto president that we've ever had. And I don't think it's a coincidence that Bitcoin hit all-time highs on the day of his inauguration. As a matter of fact, I wrote about it on Friday or Saturday. I said, wouldn't that be crazy? Because the market loves irony. And yet, there we go, Bitcoin all-time high on the day of his inauguration. Above 70,000, this primary trend is to the upside. People get really crazy with this stuff because emotions are running hot and everybody wants to time every top and bottom. You're going to miss the bigger move, folks, if you're worried about a couple of percentage swings on a weekend. Above $70,000, you want to be long BTC. Upward sloping 200-day moving average, RSI is above the 50. Next price target up is $155,000 to $160,000. That's where we're going. And by the way, if you think that's where we're going, which I do, I think this is a $155,000 to $158,000 asset within the next 6 to 12 months. You got to be long Robinhood or Coinbase or MicroStrategy or some other TradFi market play as well, because they're just moving faster than Bitcoin. It's a higher beta play. So BTC, above 70K, primary trends are to the upside. I like this above the 103 pivot towards 155. We're currently trading there right now. Ethereum, we talked about this, Josh and I, last Friday. I like this above $4,000. I don't want to add in here for whatever reason. Ethereum just hasn't done anything over the last year and a half. Just not a really great trade. It's losing ground towards multiple blue chips, Bitcoin, Solana, even BNB. For whatever reason, once again, Ethereum just not catching any love here. I want to own more above 4,000. I did get stopped out of a position a while ago for a loss. I'm not looking to add back in until we're above 4K. Solana, we hit all-time highs over the weekend. Here's your question. Was that a fake out or is that the beginning of a new run? I'm not entirely sure. Josh will talk to us about it this week and what he expects. But I do know above 260 with a stick, meaning Solana needs to absolutely close above 260. I like this up towards $400 to $420. This was one of the biggest positions in the crypto space that I had going back to 2023, but I did get stopped out a couple of weeks ago after we got the epic fake out above 260 the first time. So now I'm tentatively waiting to enter back in. I like Solana. I want to own it, but it needs to stick 260. Until we're there, I'm going to go ahead and stay out. But we could be there very shortly, potentially this week. We'll see. Binance Coin, I still have a position above 670, price target at 950. I think it's pretty simple. We're building a base on previous cycle highs. That's about as bullish as you can get. We see this particular fractal in the TradFi market all of the time. 50 RSI is holding up. 200-day moving average slope to the upside. There's nothing to do here but wait with Binance as long as we're trading north of 670. Next price target up 950. Ripple as well. We nailed this a couple of times in a row. I liked it above the 112 area. I liked it at the 117 area, actually. And then we were able to add in a couple of different times in Ripple. But once again, just following basic TA here, if you're bullish the crypto space and you get these types of fractals out here, own them. Continuation fractal breakout a couple of days ago leads next price target up to 377. Any pullback to 281 in Ripple, I'm buying more, right? I have a new position in Ripple that I opened back down here with anticipation that this was going to break to the upside, and it did. I'm looking to roll some of that profit into any sort of weakness that we get on Ripple down towards 280. Next price target up 375 and then potentially 475. Follow the fibs up. Looks great. Cardano is another one that I like. It's the exact same setup as Ripple. It just hasn't moved as much. I like it above 80 cents. I have an original position at the 67 area. 80 cents is kind of my line in the sand right now. If we break and stick above 115, I'm adding more. Next price target up 172. Next price target up 229. I like the Cardano move. Right now we're range bound, kind of no man's land here. If we can break above 115, I think risk is back on in Cardano. You got to own more of it up towards 175. Last chart here that I want to go through, and like I was just saying earlier, people say, gold's going up, so the market can't be doing well, and it's just complete bullshit. We have the data. You can look at the relationships yourselves if you don't believe me. Gold has been going up more or less at the same rate as the broader market. Once again, we have the data, and right now I think gold is at a very good spot to add some more risk. We originally opened a gold position back here at 191. It did very well for us. We added more at 216. It's done very well for us. Now we get another opportunity through a new consolidation fractal to add more. Above 250, I like this for a $300 area potential price target. The options chain is loaded. There's plenty of opportunity out there to own this. RSI is telling us that bulls are still in control. 200-day moving average has slipped to the upside. We have this continuation fractal playing out. Above 250, price target $300. Above 256, everybody's going to want to own it. So if you want to try to front run something like this, I did. I think it's within reason, right? Stop out is relatively tight here below fractal low. Price target's way up there at 3. I think the R to R here is very, very high. Even if you hate gold, I think the risk to reward kind of forces you to take the trade. And if you're into trading options, these are relatively cheap. I mean, this is a great opportunity at grabbing a low IV, big blue sky, all-time high breakout. This is really where some serious profits come in. Okay? So big themes here, completely different than what they were 4 weeks ago. Enormous turnaround in market breadth. Just absolutely enormous turnaround in market breadth that you have to take that into consideration if you're bearish. You absolutely have to. I'm not saying that last week had to be the low. I personally think it was. But if market breadth continues to improve, and that was your thesis why the bull market had to end, you do yourself a favor and scrub that out of your brain. Otherwise, it's going to curse you for the next 6 months. Lagging sectors in the second half of 2024 are currently leading year to date. I think that is important information. Leading into the middle of Q1 2024, we're going to be owning more industrials. Are we going to potentially own some of those other lagging sectors second half of 2024? Potentially. Right now, we opened up some energy and some industrials. We'll see if we're going to open up more in the future. Semiconductors potentially resolving higher. I think that's super important. If this bull market's going to continue to break out, if we're going to continue to rally higher, particularly with the type of veracity that everybody wants, I think it has to come through semis, and semis, at least last week, trying to stick and finally resolve higher. It's very bullish for the underlying market. Bank earnings have set a positive tone for earnings season. Banks have absolutely killed it. For all of you guys out there that were citing that banks were insolvent and they were hiding their losses, I guess you just got to wait another year. Maybe you're right eventually, but not right now. Banks absolutely killed it. We got a bunch of new all-time highs. Goldman Sachs, JP Morgan, Morgan Stanley. You got to own something, guys, or you can just complain about it. There's plenty of those guys on X right now and TikTok and YouTube screaming about uptrends not being fair. What's not fair is having 100,000 followers and telling them that banks are going to go bust because you don't like uptrends. You don't like making money. You'd prefer just everybody to be as miserable as you. Listen, bank earnings have set a positive tone. Look for the follow-through over the next couple of weeks, particularly when Mag 7 starts to report. Crypto and higher beta groups are leading the market higher. Crypto just hit an all-time high. Bitcoin just hit an all-time high today. And we're starting to see that follow through in higher beta groups as well. I do think with semiconductors resolving higher, that higher beta groups are going to continue to lead the market higher. Use that SPHB against SPLV ratio to confirm that before you start buying everything under the sun higher beta. But that's the way that we're seeing it, right? They just closed at a 6-month high, that ratio. We're seeing the crypto space break out. We're seeing semis resolve higher. I think the perfect storm is really coming for the next leg up, coming through higher beta stuff. Lastly, you must be prepared to pull the trigger when the market signals buy. There's a lot of people that are sitting on the sideline right now, shell-shocked from over the last 6 weeks. I'm telling you, after doing this for 15 years, guys, that if the market tells you to buy and you don't buy, you're going to be sitting there twiddling your thumbs 6 to 8 weeks from now going, what the fuck was I thinking? Because in hindsight, it's going to be 2020. You got to be able to get in the trenches, and when the signal's there, pull the trigger. Trigger is very close. Signals are very close right now. If you're inside of TTI, you know what levels we're looking at to the upside in the indexes. We could be there as early as tomorrow morning. We'll see where we're at. But once again, don't be afraid to buy the stuff that is going up if the market is telling us that it's time to buy the stuff going up. Okay? Chuck, I will talk to you in Discord about that. I don't want to do that right now, but yes, we will. Okay? For those of you that have watched for the first time, we run these types of sessions twice per month. It gives us an opportunity to take a step back and look at things from a weekly and a monthly standpoint. It really allows us to get out of our own heads. A lot of the times people have the right idea, but they let the worst type of information come in and kind of sabotage their profitability. You don't need to be focused on every intraday move and every single thing every single day in order to make money. As a matter of fact, you're probably going to lose a lot of money that way. So taking this opportunity to take a step back every 2 weeks and look at a monthly chart and then a mid-monthly chart on the weekly time frame gives us an opportunity to reset, figure out which areas of the markets are leading. Is it bullish? Are we bearish? What are we doing here? And then executing on a day-by-day basis. So if you like that stuff, link is in the description if you'd like to try us out for a 3-month membership. I would appreciate it. If you have any questions, feel free to reach out. Enjoy the rest of your Monday. Once again, happy MLK Day, Inauguration Day. Fingers crossed that we get a gap up in futures tonight. Any questions inside of TTI, feel free to leave them as a comment below the video, and I will get back to you as soon as I can. Enjoy the rest of your Monday.